Journalism is the business of telling people what's happening and why. But when it comes to business journalism and explaining stock market swings like those of the past 2 weeks, it seems that any explanation is just as good as any other.
Watching business reports about stock market volatility this week was a little like watching sports analysis. You call it as you see it.
The catalyst was another plunge in Chinese markets.
Crude oil down below $40 a barrel. This is pressuring a lot of energy companies.
Today's slide was long overdue.
The market has gotten ahead of where the actual economy is.
Okay, those are a few explanations, but let's go deeper.
Some believe stocks are too expensive for a slow-growing economy.
This is a summer Friday. The trading is quite light. That sometimes means that you have an increase in volatility.
This was not one of those lightly traded summer sessions. Volumes was the highest in nearly 3 years.
Oh, I get it. It's light trading, but it's not lightly traded. Any good advice?
Stick to your game plan and do nothing. You got to relax. You really have to chill out here.
I think there's some great opportunities here.
It's really healthy when you scare people. What you want to do is scare them without giving them a heart attack.
I'll take that to heart. Anything else I might have overlooked?
Somebody called fire and everybody decided to head for the door.
Now that's a declaration I can understand, along with buy low, sell high. Or is it the other way around?
This has actually been something that's stuck in my craw for years, maybe even decades. The trying to explain, one day it'll be, oh, well, Apple put out a dud product. Google isn't worth the value that it is. The Greece economy is tanking. The China this, Pakistan. It's like, it's just the volatility. It's 14 guys with green visor caps going like this, sell, buy, and controlling all of our destinies. It's not any more complicated than that.
Actually, it's hundreds of thousands, millions globally of individual transactions going at a mile a minute, and there's no way on God's green earth to understand and get into the minds of everyone who's doing it. Now, these analysts are talking to, bulk brokers or big-time brokers, and they're saying, well, here's why I think, and they're just regurgitating that. But you're absolutely right. They don't know what's going on or what's going to happen next. The only certain thing in life that you can go by is don't eat yellow snow.
I would endorse that, absolutely. Actually, a lot of this is being driven by automatic decisions being made by computer. And
I forgot to throw that in.
Who knows what the computers are thinking? What I love about this is that when something like this week's drop happens, all of these analysts come on and they start discussing the reason why, and it all makes sense. You say, well, gee, that makes a lot of sense. China's having trouble, this, that, and everything else. But then you could look back to the day before, and they're saying, everything's fine.
Oh, I know.
Stock market's in great shape.
The last time I looked, the Greece economy is still in the tank. And it's like, oh, that's not the problem anymore? Now it's China?
I didn't think I would be in the position here of defending business journalists a little bit. But I think other than the one woman in the package who got the volumes incorrect, I thought those were actually pretty reasonable statements. I mean, I think it's a totally reasonable thing to explain. This is what happened in China.
That's my point.
Well, but they're all contributing. It's not as if it has to be one or the other. It's not. I actually thought that was. I thought actually the media handled this week surprisingly well, because one message that came across very clearly was, hello, retail investor who has a 401k or a small brokerage account, don't sell, because you're exactly going into the worst psychology of the market, selling when it drops and then buying again when it's high again. I feel strange defending them.
I feel like, there's a participation in the panic that can be really, I had my ticker going all over today on my computer, just, you're like, you start sort of feeling it, and a lot of it is the breathless kind of
I just like to hear a little more humility. We don't know.
Well, I agree with Josh. They did a pretty good job, though, of not stoking panic, with the exception of that one guy was on CNBC who said, I'm going to make a phone call.
Oh, that guy,
which made me think, what about my puny retirement fund? But part of the problem is the volume of commentary. I generally think we don't need 24-hour news channels, and I also don't think we really need 24-hour business channels. They have to fill all of this time by repeating, speculating, talking about things that they know maybe tangentially about, and I think that contributes to the noise. There's too much.
Anyone who watches CNBC deserves what they get.
But even if it hadn't been for the shooting, sadly, in Roanoke, I think you would have seen wall-to-wall coverage about the market across the board on the cable, because there was nothing else really that significant to talk about other than Donald Trump.
But now it all came back. It all bounced back within 1 week. So don't panic was actually the most sound advice.
And my puny retirement fund is safe.
You don't think it smacks a little bit of sports commentary, though? It sort of has that same ring to it, the sort of analysis, and everybody gets sort of, part of the team.
Well, there used to be a theory that any year in which the Red Sox won the pennant, the market either tanked or did well. I can't remember.
Exactly.
But that there was some cause and effect.
There weren't a lot of data points there for
stayed
a few decades.
No, there weren't.